Also bring on board Sandip Sabharwal, who's joining in on fundamentals. We also have Rajesh Palviya on the technicals. And Sandip, let's get in your take first up on the move that we're seeing in PSUs. And a pretty prominent fact was that in the month of July, a lot of these PSUs have come off significantly. What's the view on the likes of Bharat Dynamics, SAIL, IRFC, etc.?
I think various companies have their own dynamics. So I think on the defense side, many of these companies are going through a phase of correction, and some of these could actually come into buy zone as the long-term visibility is strong. Railway stocks ran up very significantly, so I think that's where we will see more pain possibly because the order flows and the investment cycle seems to be have reached a stage where incrementally it's not growing as rapidly. So it's possible that it might again restart, but that's something we need to monitor. And on the steel side, steel prices have fallen to 2-3 year lows. So as far as sale goes or other steel companies go, I think we could see many of these companies actually go into losses over the next couple of quarters.
Okay, losses as well. Perhaps you should prepare yourself for that because defense, of course, as a space has been fairly active, but earnings-wise, not as much. But what continues to surprise us on the earnings front, Sandeep, is trend. I mean, look at the numbers that we got last week as well. The valuations are clearly thrown out of the window at around 110 times forward earnings. What should one do about companies like Trent and even Siemens for that matter? Now, the earnings were weak, but the valuations continue to stay elevated.
Yeah, so for many of these companies, because of the delivery of results they have given, or for companies like ABB or Siemens, the kind of margin improvement they've seen over the last 2 years, combined with the fact that they've been getting substantial orders, or makes a case where for people who are holding for long, it doesn't give any reason for them to sell. Even for Trent, I think they seem to be operating in a totally different zone vis-a-vis other retail companies which are being seeing stress, but their model is working well. So, but like you rightly said, the valuations are so high, it's tough to justify new buying in these stocks.
Yeah, tough to justify buying into some of these new stocks. But what do you make of Ola? Have you looked at it in detail, Sandeep? Would you be a buyer? Because it had a fairly muted listing. It was just up 1 to 2%. But during the day, there was incremental buying that came in. And we were tracking the delivery data for some of these latest IPO as well. So quite a bit of delivery-based buying as well, almost 40-50%.
Yeah, so I thought that it's not overvalued at 76. Obviously, at 91, it's overvalued. So just because it moves up 20%, we don't turn buyers. In my view, this is one company which will find it tough to ever make profits, given that they're actually losing market share now. Competitive dynamics are much more stronger. Most legacy players are going aggressively into their space. So I think it's going to be a tough ask. Today, it's more a liquidity mismatch in the market where if you just look at mutual fund data, 37,000 crores inflows last month. If you combine all IPOs, QIPs, etc., it won't be more than 10,000 crores. So huge amount of money is chasing ideas and it's creating some distortions. Now, how long these distortions will last, we'll see. But then tough to justify these kind of companies.
Rajesh, let's get a view from you on the charts when it comes to pharma, because that was one of the standout performers sectorally last week. How are you tracking some of the heavyweights and the movers within pharma?
Good morning. Yeah, so most of the pharma stocks have shown good buying interest in last couple of days. The stocks like Sun Pharma, Lupin, Dr. Reddy, Alcam Lab. So these all stocks are looking very bullish. And the way most of the pharma stocks are holding ground at higher level, we believe that, here there would be a continuity of uptrend. And we may see furthermore, upside in most of the pharma stocks. So from that space, at this juncture, we like Sun Pharma. We believe that, the way Sun Pharma managed to view breakout of its previous consolidation, we believe that, here we could see a upside momentum towards 1800 to 1830 on a positional perspective. So one can look to buy this stock in any kind of minor decline in volatile market. one can keep a stop loss around 1630. Aurobindo Pharma is also looking very promising. The way stock has witnessed a buying action in last couple of weeks. Here is also, a possibility that, this stock may also, continue furthermore upside. 1500 to 1530 would be the next target on the higher side. So buy on dips is the strategy in Aurobindo Pharma also. Keep your stop losses around 1380 to continue hold on the long position for Aurobindo Pharma. So I think most of the pharma stocks are showing good traction in terms of buying. So here one can look to buy some of the opportunity on the buying side in volatile market.
Okay, let's get in your thoughts then as well, because we have some earnings that are slated to come out later this week. Not really market moving, but there's Apollo Hospitals among the lot that's set to come out with its quarterly performance. What's your expectation, and how have you looked at Pharma, which was the top sectoral gainer last week?
The pharma's been doing very well, and what's been good for the pharma sector has been margin expansion across the board. For most of the companies, we've seen margins expand as the input cost pressures have moderated and pricing seems to have stabilized. I think, and this is one sector which is also under-owned today from being over-owned 5-7 years back. I think it's a buy on dip sector for sure. And specific companies we have to look at, but across the board, I think the companies we have seen have done well. Hospital stock results till now have been mixed. Like the growth has been like high single digits or low double digits. There's been some improvement in margin. So I think that's something we need to monitor how they deliver, because valuations are not cheap for hospital stocks. Most of them are trading at like nearly 70 times earnings or some even higher.
I want to go back to that point on Siemens, Sandip, again. Now, this is a bellwether stock. It's a company where slowdown, if there is at all, it tends to come with a lag effect because they have superior technology, superior margins. They are in businesses which others are not there. So it's not like a commodity based business. If that business is slowing down, and if Thermix numbers were not that better, ABB global profit warning seems to be coming out. Is the best behind some of these so-called capital goods stocks now, especially the engineering based?
See, we have been thinking about like that for the last 2-3 quarters, but then these companies have been delivering strong results. Like Siemens results are below expectation, but order flows have been strong. So I think it's too early to say that any such thing is happening because of the entire automation cycle in India, globally, etc. There's a lot of traction in the businesses these companies do, and they have a moat around it. So I think that's the challenge. So it, like you rightly said, it's very tough to justify buying them at 80, 90 or even 100 times earnings. But then for people who are holding them, the visibility still seems to be strong. So I think for many who are holding and are in deep profits, I think these stocks can still be held and bought only on corrections.
Okay, so that's the latest coming in as far as Siemens ABB is concerned and how the overall capital goods space is looking like. But Naresh, what's the view on Balkrishna Industries? That stock might be in focus today because of the earnings, and there have been a couple of downgrades which have come by. It's otherwise a favorite of the investor lot, but anything on the charts?
So technically, Balkrishna has actually made a double top, and the interim lows broke down yesterday. So the two tops around that 3350, 3380 mark. The recent swing lows below 3100 being taken out. So short term looks like a top is in place. The risk of a downside towards that last cap up around 2900 mark to 2900 to 2800. So that's the downside risk going forward. Not a buy at current levels. It's actually a short-term rise with a stop loss at 3200 levels.
Rajesh, a pseudo correction has already kicked in some of the defense PSUs. I'm looking at, let's say HAL, just for reference here. A 5700 rupee stock is now well below 5,000. A similar kind of pattern is visible in BEL. 10-15% correction has kicked in. So do you think PSU stocks have corrected, and do they warrant a re-entry, or they've topped out for multi-months now?
So, Nikunj, if we analyze the long-term structure, still structure is on the bullish side, though there is some corrective move in most of this defensive stock. But still, if we analyze on the long-term structure, they are holding above their breakout levels on the long-term chart. So yes, there is a possibility that we could again attract the buying interest in this decline. So those who wants to buy for investment perspective, yes, it's an opportunity to buy and accumulate these stocks. So I think from that space, BL is looking very promising. Still, stock is almost negotiating with its immediate support area on the near term as well as on the short term chart. So I think one can deploy some long trade in BL with stop loss of 285, and once stock again crosses about 315. So I think it will again resume its uptrend, and possible target on a positional basis we could see towards 340 to 350 on the higher side. Again, Bharat Dynamics is also looking promising. Since last 2-3 months, we are seeing that stock is consolidating in a broader range. The way stock is holding about 1300, 1350 mark, I think there is again opportunity in BDL also. Here also one can buy and accumulate this stock. On the higher side, 1480 is the immediate supply zone. If it crosses those levels, then it may also scale up to the again its all-time high trajectory in a positional perspective. So BDL is also one can look to buy in this decline. With stop loss of 1340 on the higher side, we can see a target towards 1750 to 1800 also. HL is now slide below to 50-day moving average. So I think one should wait for HL to settle down, because still supply pressure is not absorbed in the stock. We will wait for some couple of days. 4600 is the immediate support area on the downside. If it's able to defend for next couple of weeks for this 4600, I think again here would be again an opportunity to buy HL. But I think one should wait for some time. 4600 needs to be watched closely in next couple of weeks.
Okay, point taken.
Few stocks that we need to keep an eye out for. Firstly, RVNL, Vodafone Idea and Dixon Tech. These companies are expected to see an inflow of anywhere between 215 to 275 million US dollars, which is nearly 1 to 4 times their 20-day average volume. Apart from that, it's Zydus Life, Oil India, Prestige Estates and Oracle Finance, which could see an inflow of anywhere between 160 to 185 million US dollars, which is nearly 2 to 7.5 times their 20-day average volume. Bandhan Bank is one stock that might get excluded from the MSCI Standard Index, and because of this exclusion, an outflow of close to 126 million US dollars is expected, which is nearly 2.4 times its 20-day average volume. And the key stock to watch out here would be HDFC Bank. Now, HDFC Bank's weightage in the MSCI Standard Index is expected to increase, and because of this increase in weightage, the inflows that are expected in HDFC Bank is nearly 3.5 billion US dollars, which is nearly 8 times its 20-day average volume. Now, the street has been expecting this increase in weightage for HDFC Bank, but the quantum is something that we need to track when the actual announcement comes in. So keep an eye out for all these stocks in trade, because the MSCI announcement is expected to come in August 13th early morning before the market opens.
Thanks for that, Samit, and giving us a heads up as to all that's going on. Meantime, Sandeep, let's get in your take then as to what the outlook is on Ola Electric. The kind of listing that we saw by the time it wrapped up Friday's date was comfortably in the green, and Bhavish Agarwal very confident about the road ahead and how EVs is going to be the future. How are you looking at Ola Electric post its listing, and now what it means for some of the other listed players?
Ola, we already discussed that I think the valuations are excessive for a company which is deeply loss-making and which is unlikely to make profits anytime soon. So when we say anytime soon, in the next 3-4 years, it's very tough to see them making profits as they lose market share, as the overall industry growth has slowed down and other legacy players get into their space and increase their market share. So I think right now it's a more a liquidity game where too much liquidity is chasing these kind of stocks. So investors need to be careful in these stocks.
Sandeep, could it be a case like, Paytm and Zomato, not Paytm actually, that's a wrong example. It's a Zomato and Policy Bazaar. When they went public, they had big losses. Valuations were difficult to establish. But ultimately, when the business started growing, losses became, so that business became profitable. Could that be the story for Ola Electric also?
Before something like Zomato, it was very clear that they were in a duopoly. Eventually, profits had to come, and entry barriers are high. So it was a totally different case. This is a case where you have such strong incumbent players with such deep pockets that eventually they are going to take away market share from you. And sometimes the pioneer has a disadvantage, which could play out for Ola. So I think this will be a totally different case from the two companies you quoted.
Okay, fair enough. Meantime, some brokerage calls this morning then, and Trent is on Jefferies' radar. They've got a hold rating with a target price that has been hiked to about 57.50, saying that the store additions were soft, but growth momentum remains strong, although expensive valuations is what is keeping them on the sidelines. Where do you stand, Sandeep, when it comes to this entire pocket and Trent in particular?
So Trent is a company which has done well. It's defied the analyst expectations and it continues to do so well, which is leading to the kind of valuation it enjoys today. So it trades at 120 times next year earnings. So the whoever has sold it has made a mistake over the last few years. Now the company should continue to do well going forward also. But then as valuations become higher and higher, it becomes more and more difficult to justify it. So my view on some of these stocks is that for people who have bought early and are holding on, they should not ideally sell and try to ride the long-term wave. For people who want to buy, I think they need to wait for some dips, some bad results, some bad market days only, and then buy. Because it's tough to justify 120, 130 P for any kind of company.
In the pre-open rates, 18 seconds from now, I'll just mark, I don't think there would be any impact on Adani group of stocks because of those allegations which have been raised by Hindenburg again in terms of trying to connect a dot of the SEBI chairperson and what has happened in terms of some of their investments in overseas funds. But I'll wait for the stocks to just open up. Let me just mark it. I don't expect any reaction whatsoever, logically speaking. Sometimes markets can be logical, that's a different story, but I don't think any large reaction, so to speak, to come. These are pre-open rates. I think they will change. So please don't go by them. Let's wait for the rates to settle. Sandeep, the grain of the truth here is that last week, even though we had that scary Monday, Nifty for the entire week is down only 1.5%. Nasdaq is down by only 0.5%. Japan, which was down 12-13% on Monday, for the week closed down by only 3.5%. So it's not only in India. I mean, globally also, what appeared like a perfect storm on Monday and Tuesday has suddenly subsided.
So if you look at the broader move of the markets on an overall weekly basis, we would think that moves have been subdued. But volatility has gone up substantially. And typically such increase in volatility comes at times where there is deep uncertainty about which way the markets will go. So there are varying news flows coming in, and that is creating confusion in the minds of the market overall. So I think, given the valuations and overall construct, my view is that next few weeks or next 2-3 months, you should see some more moderation in the overall markets in India as well as globally before they settle down for the next up move.
Rajesh, what's the view on some of these consumer durables play? I'm just looking at Volta's numbers that just came an hour ago. The net profit has more than doubled. Revenue has seen a very sharp jump. The margins too have expanded. Of course, it was a summer month, which is the best for these companies. But even in terms of stock prices, would you say that the best is behind, or would you still stay put with an investment in the likes of, Blue Star or Voltas for that matter?
So Voltas, Havels, all these stocks are, attracting some profit taking in last couple of week. And looking at the near-term, short-term structure for Voltas, the stock has shown a breakdown below to its upwards sloping trend line on the weekly chart. So looking at the structure, stock is now slipped below to 50-day moving average. Some more pressure we could see in Voltas on the downside. 1400 to 1380 is the next important support area for this corrective move. Though short to medium term structure is bullish for the stock, so I think in decline towards 1380, 1390 is a again attractive level to re-enter in this stock, as overall structure is bullish, and I think there would be again support buying action around those levels. So I think if you want to buy Voltas, wait for another 2-3% kind of correction. Then you can deploy some long trade with stop loss of 1350. Even in this space, I think Symphony is looking very promising. The way stock managed to give breakout on the daily, weekly chart time frame, I think here is a possibility that Symphony may exhibit good amount of rally on the higher side. After a long consolidation, stock managed to give breakout with the volume action. So I think if stocks continues to hold above 1630, 1620 mark, there is a possibility that Symphony can continue upward momentum towards 1750 to 1800. So here one can deploy some long trade with stop loss of 1620.
All right, let's find out those mid-cap strategies and what exactly the pre-open rates are indicating. For now, it's a bit of a soft start, down 1/3%, holding on to 24,270 levels. Naresh, your top mid-cap call?
So that would be a buy on Vijaya Diagnostics. We are seeing a good momentum across the diagnostic space. The trend has changed. South Tier Vijaya Diagnostic has been a leader in the last few months, making a classical triangle formation which has a breakout about 850 levels. And once that happens, we could see a quick dash towards 950 in the short term. South Tier has stop loss to be placed at 780 and a target price of 950 in the short to medium term.
Okay,
All right, and Rajesh, let's get in your top mid-cap calls.
So first one is from pharma sector, that is Alkem Lab. Stock is continuously moving in uptrend. Stock is almost trading near to its all-time high trajectory. The way stock is holding the ground at higher level, we believe that here there would be another round of rally we can see. We are projecting target towards 6,000 level for the Alkem Lab. One can buy this stock with stop loss of 57.85. Another stock is Axis Industry. Series of high top, higher bottom formation. This is the fifth consecutive month where stock is making higher high-low formation. Sustained buying action is taking place in this stock. We are projecting target towards 1520 for Axis Industry. One can deploy some long trade in this stock with stop loss of 1420.
Okay, point taken. So those are some top recommendations coming in from our charters this morning, but time to run you through the...
If you like this video, then like, share and subscribe to ET Now.